That's what I did. I saw my portfolio go down by, I think, close to 65, 70%. Same amount that S&P 500 went down because most of it was in S&P 500. I was indexing by that time. I barely had any single stock position even then. Now, the question to a lot of youngsters is this. If instead of spending all of that time and effort, if you had really become really great at your job, if you had invested that time into your human capital, you would have gotten a 20% raise next year anyways. So I think the meta question is this: why don't more Indian youngsters take that path to kind of go for excellence, to go for this long-term compounding of human capital, which is going to make you far more richer? My entire portfolio is passive funds and gold. I use beta as leverage that I told you. It's a very low-touch way of managing one's portfolio.
There are actually bricks in your house that I can come and loot.
No, there are no. So ideally they should be SGBs, but I don't have a Demat account. I just don't want to even open that Pandora's box.
You don't even have a Demat account?
Demat account ही नहीं है मेरे पास, इसीलिए.
बहुत बढ़िया है. Hello everyone, I'm Ravi Handa, your host for Desi FIRE Podcast. And today we have Gaurav here with us, who is currently the CEO of Kuvera. Gaurav started his journey in Ranchi, and from there he went to IIT Delhi and he studied computer science over there. And right at the peak of the Dotcom boom, he graduated and moved to the US. So my first question to Gaurav would be that only. Gaurav, what was the dot-com boom like, and especially in the US, and right when you graduated, that's computer science from IIT, what were those days like?
First of all, thanks Ravi for having me on this podcast. I think the FIRE community should grow in India. It's an initiative that people should focus on. That financial stability, that ability to be able to say that I control my own destiny because I have enough in the bank account, I think that is very, very powerful. So keep up the good work.
Thank you.
Coming back to the question, in hindsight, I can say a lot of things, but this was the year 2000, right? I mean, it also kind of marks my age, but that's okay. We were a small fish in a small pond, right? This was Ranchi. Internet connections and the information age was not as ubiquitous as it is today. In hindsight, yes, now we know that 2000 to 2003 was a .com. But at that point, I think at least I can say about myself, maybe some of my batchmates who were from larger cities had more exposure to international news. I accepted an offer to join a credit card company, right? So I joined Capital One in the US, and I had never owned a card myself. But our thinking pattern was very different. It was a job in the US. It was a dollar-paying job. It was literally a step to get out of the middle class in India and kind of try and achieve something larger. And I think that is what the focus was. I would be lying if I said that I understood the repercussions of the .com bust and this and that. I did not. It was a great offer. There were only like 6 people in my batch who got that offer, and everyone around you is just saying that, oh, you know what, dude, you're going to go to the US and work. Your life is set. This is one thing in India, by the way, that people do all the time. ये कर लो तो life is set. फिर ये कर लो तो life is set. Life set नहीं होती है, पर वो कर लो बढ़ता जाता है, right? So that was the reality.
मतलब ये जो मेरी काफी लोगों से बातचीत होती है अभी आजकल की, अच्छा हाँ ठीक है अब तो फायर हो गया, अब मतलब दिस इज द लास्ट स्टेप ऑफ लाइफ सेट, और फिर मैं उनको बताता हूँ कि नहीं भैया अभी और 25 क्राइसिस है जो कि चल रहे, लाइफ सेट नहीं होती है. I don't remember who said that ki it is dust that settles, not men. I forgot who said that, but I think you worked there for around 3 or 4 years, and then you decided to do an MBA at Chicago Booth. So what led to that transition? Because, at least you would have understood by then, I assume, that .com and technology is here to stay. That's not going anywhere. But you still chose the path to go to an MBA, and that too at Chicago Booth. Must not have been easy to get in.
When I was kind of learning about the credit cycle and the credit economy and credit cards, right, it really piqued my interest in finance. Before that, I don't think I had studied finance, right? In engineering colleges, you do some humanities, and I used to love the humanities. I used to love reading and courses on films, etc. But that's the only exposure you have. You don't have a lot of economics and financial exposure in most engineering colleges in India, as I know of it. Maybe things have changed, but at least at that time it was zero. So when you start learning about these things, and you start learning about investing, and you learn about compounding, you learn about the credit cycle, the investment cycle, and how the stock market works, it really piqued my interest. I really wanted to understand what works, what does not work in investing. Right? In my own investing journey, I wanted to kind of learn more about it. So the move to Chicago was to kind of get a better understanding of financial markets, and hopefully to be able to get a job in the financial market, because it was not very easy to break into Wall Street from a credit background. It's not a path where you can just walk into or even through your friends kind of get introduced to a large bank or a large hedge fund or a large PE and say, what, I've done credit. Maybe private equity to a little bit, you can do that, but other verticals, it was very hard to break into that. And a Chicago MBA felt like the right path, the shortest path to get there. And Chicago is known for very deep truth seeking in financial markets, right? I mean, if you think about one school that has done the most amount of research on financial markets, most amount of differentiated research on financial markets, right? This whole concept of everything that we argue about, and we will probably talk about it in going forward in this podcast as well. Market efficiency, passive versus active, what strategies work in the market, can retail beat the market, can fund managers meet the market. All of that research has originated and has come from Booth in one way or the other, right? It's either at the college or a professor who has studied at the college. And it was really a privilege to kind of, to be able to study under Pharma, to be able to study under Taylor, and to take classes from them, from guys who have actually written some of this path-breaking research. And it did kind of serve its purpose, because, I got a foot inside Wall Street. I was able to join Morgan Stanley immediately afterwards.
Okay, so when you were at Chicago Booth, was Raghuram Rajan also there at the same point of time? Because I remember him being there as a professor and him writing fault lines around that point of time itself. Mid-2000s is when he wrote that book, which sort of predicted the GFC.
Yeah. So I think Professor Rajan had just taken up a post with the World Bank. I think he was the chief economist at either IMF or World Bank, one of the two. So he was not at the university the 2 years I was there.
And post-Booth, you jumped right into the belly of the beast with Merrill Lynch is where you did your intern, and then you joined Morgan Stanley right after college. And you were there at the time of the financial crisis. So any boiler room stories from there?
I mean, it's all very well known. I think one thing I can say for sure is people underestimate the human impact of a lot of these crises. And I'm not just talking about the mortgages that went under, right? Like across financial services, banks, trading, cards. There was a huge loss of employment. Tons and tons of jobs were lost forever. People were forced to upskill really, really quickly. Events like these are really hard to describe, right? When you're living through it, your protectionist instincts take over, right? You just need to survive. You know that bad things are happening all around you. You know that bad things can happen to you at any point in time, but you just want to kind of be able to navigate it in a way that you preserve your compounding, your learning curve, your growth curve. That should be preserved, right? So it was very interesting times. There are tons and tons of anecdotes, right? Like banks kind of firing entire departments by turning off their access cards, right? Like all kinds of stupidity that you would say why, but it happened in the heat of the moment. Decisions were taken that I don't think anyone is proud of it afterwards. But it happens in pretty much most industries when they are under that amount of stress. But the industry is a perpetual industry. Finance is not going to go anywhere, right? Like Jeff Bezos says, 50 years down the line, 100 years down the line, people will still be buying things. They can change how they are buying it, they can change what they are buying, but they'll still be buying things, right? Same thing is true for finance. I think it is a perpetual industry. And then it bounced back. It took time. During GFC, though, at one point, till the Fed intervention happened, I think there was a real fear that pretty much all the banks will go under.
Scary thought. And I assume you would have had some sort of a portfolio by then. Did you double down on buying something, or you made these stupid mistakes like a lot of us did, sell whatever you have, we'll come back to it later at some point of time? What did you do with your personal portfolio at that point of time?
So one of my biggest learnings on how to manage my own personal portfolio actually happened through GFC. And no, I didn't sell early and buy at the bottom. Those are anyone who says that they did it, good luck to them. But I would think that's not what really happened, right? When things are falling like that, you just watch your portfolio crash. What can you do, right? As long as you don't have a cash flow crisis, as long as you don't need to sell immediately, we are very good at compartmentalizing that pain away and saying, "Yeah, 6 महीने बाद देखेंगे, 1 साल बाद देखेंगे," because right now it's just falling so much, right? That's what I did. I saw my portfolio go down by, I think, close to 65-70%. Same amount that S&P 500 went down, because most of it was in S&P 500. I was indexing by that time. I barely had any single stock position even then. And a point comes where everyone on the trading floor, and these are traders who were there during the Dotcom burst, who were there, they've started trading since 91, 95. They've seen market cycles, and they're all getting like, "Dude, it's bahut ho gaya, like we need to kind of deploy excess capital." Not everyone has excess capital. That's the other thing, right? Like, I mean, it's very easy to say, "Oh, did you deploy excess capital?" As if like, pada hua tha, paisa laga diya. So I didn't have excess capital. I was mostly either spending it or was fully invested. So that's when I kind of did the first time. What I did was I used beta for leverage. So simply what it means is, at a market, when a market has crashed sufficiently, you will never know whether it's a bottom or not. You can do a bunch of things, right? If you have excess capital, you can invest it. If you have capital in lower risk assets, and you have the gumption, for example, you can break your FDs and invest that money. As long as you're not touching your emergency corpus, आपको market में add करना है, right? Now, one way to add is also through beta, which effectively means is that you will sell something like an S&P 500 and buy NASDAQ and say small cap value. NASDAQ was down 80% at that time, right? So effectively what you're doing is you're selling an asset which is down 60% and buying an asset which is down 80%, and which has at that time about a 1.6 or 1.7 beta on the market, right? So you're getting a 60-70% leverage, but you're not taking a loan to get that. It's not a margin loan. So it's a bit of a tricky concept to understand, but beta can help you get leverage at zero cost. Zero cost is a bit of a misnomer, because high beta assets can still continue to fall more, right? So you have to be prepared that you have not picked the bottom, that there is still 20-30% more of pain left. And you have to be prepared for that, and you do that. It was the first time I did it. NASDAQ, of course, did phenomenally well. Small cap value did okay, better than S&P 500, but not as well, because I think the value itself as an axis of returns lost during this time. Value's not been working in the US for quite some time. Same thing is true with small cap. But that idea stuck with me. The idea stuck with me, which was basically, you can be fully invested at all times and just go into a higher risk asset as long as there is no cash flow emergency. So what you need to avoid is cash flow emergency, because that is what forces you to sell at bottoms. Then you can actually create an artificial leverage without having to borrow money or doing anything else. It's something I did again when COVID struck, by the way. At one point, my entire portfolio was like 95-96% of my portfolio was small caps. It was literally the same thing. I just sold out of all large cap and just went big into small cap. And then after that, all my investments have been in other indices. So now my small cap exposure is somewhere in 25 to 30%. But you can control leverage through beta, and that was the big learning that I've continued to use since.
Fair. And I believe you worked there for another 6-7 years, and in 2014 you moved back to India.
Yeah.
What led to that decision?
So there's this Dodd-Frank, regulation that had come in 2008, which did not allow U.S. banks to do prop trading. So I was doing prop trading with Morgan Stanley, which effectively means we were investing the bank's own capital. We didn't have a client. The bank has a balance sheet. The balance sheet is farmed out to different trading, PE, VC, a lot of kind of like, it's real money management, but it's just that you have only one client and you can use a lot of sophisticated strategies. So I used to do a lot of startup. I used to do a lot of factor investing, so on and so forth. 2014, and I'd moved to Hong Kong to do that because it was not allowed in the US, but abroad you could still do it. 2014 is when Fed started clamping down and said that US banks cannot do this anywhere globally, right? So our desk shut down, and I was thinking about, okay, what do I do next? Should I continue in this industry? Do I want to get to a hedge fund? Do I want to start something on my own? Or do I want to explore something at the intersection of technology and investing? I'd been very keenly following what had been happening in India because I've always had a small portfolio in India, and I also kind of look at my parents' portfolio. So in 2013, SEBI came out and they said, there's going to be a new class called direct plans. And by 2014, 2015, my view was that the markets are underestimating the impact it's going to have. I think, I don't know if you remember that, even till 2018, 2019, we were always told that no one's going to invest in direct plans. India has always been a regular plan country. It will continue to be a regular plan country. My view, partly driven by what I've seen happen in the US, is that in financial markets, you cannot stop two things. One is digitization. Any and every process that can be made digital will be made digital. And the second is reducing margin. Margin only goes down in financial industry. That it doesn't, it goes up only when the pendulum has moved too much to the far left, right? Like it's gone too much down and the industry as a whole is losing money, then they'll start kind of bumping up, and that also very, very slowly, right? So if you think about these two kind of like very macro trends, then to me, it was very clear that, hey, direct plan and online investing in direct plan is what is going to be the game changer in India. And that is the big opportunity to kind of come in, build a business, and then offer a bunch of other financial services, right? Do anything and everything under the sun that is related to wealth management, but use this tailwind of online direct plans as your kind of go-to market. So that was the idea. That was the thought at that point, which led me to start Kuvera.
Okay. So just for our viewers, if you can just give a small summary about what are the various ways people can buy mutual funds, the regular, direct, and all that, so that people know what is being talked about.
It's a very simple matrix, right? So there are two types of mutual funds. Regular is distributed by an intermediary that is getting paid a commission from the mutual fund company. Direct is where the intermediary, whoever they might be, will not get a commission from the AMC, from the mutual fund company. They can charge the end user if they have a contractual obligation that of that nature. So in average, what happens is direct plans total expense ratio is about anywhere from 75 basis points to 1% lower than regular plans. Put differently, your money compounds at a rate which is 0.75% to 1% higher, right? So you get to keep more of your money, you get to grow more of your money, so on and so forth. So these are the type of mutual funds. The other axis of that matrix is how are you going to buy it, right? You can buy it through an intermediary, through a purely physical process where you fill out a form, give them a check, and your units will be assigned to you. Or you can do it online where you can log into a portal. It could be a mutual fund website where you can go to the mutual fund website, buy it from there. You can come to a player like us, like Kuvera, and buy it from us where it's a direct plan. On the mutual fund side, you can choose between direct and regular. Then there are online portals which are direct only like us, or say there are other players who are regular plan only. But that's how you have to think about it. Regular mutual fund, offline, online. I think majority of the country just picks one of the buckets and goes with it. So let me give you some numbers to also, put some of these things in perspective. So in the last 10 years, the AUM of mutual funds has grown from about 7 lakh crores to 61 lakh crores, right? About 9x. The SIP book has grown from about 2,000 crores to over 20,000 crores today, which is about 10x. Now, let's come to the two pieces that I was talking about, right? Direct, regular, and also active and passive. Direct plans, which were launched in 2013, are now 45% of all AUM. So around 27 lakh crores is in direct plan AUM in 2024. And out of that 27 lakh crores, the majority is from DIY investors. So these are people who are coming on platforms directly to AMCs or through platform like ours, but they're taking their own investment decisions and then they're buying or kind of rebalancing the portfolio on their own. So what we are seeing is that more and more the investing style is becoming systematic. More and more the investing style is going towards direct. And the third big tailwind we see is that while passives were only about 10 to 15,000 crores in 2014, today there are 9.5 lakh crores of AUM, which is about 15% of the AUM. Some of it is of course driven by EPFO, but even outside of that, there has been a huge growth in passive AUM. And part of the evidence is that I think in the last 1 year, if I look at all the NFOs, almost like 40 to 45% of NFOs have been in the passive space, right? So what we see this, and the way I interpret this data, is that the future is going to be direct, systematic, and passive.
Fair. So let's talk about direct plans, which is what Kuvera sells. Now, I can buy those direct plans, from other competing companies like Kuvera. The other option is for me that, I'm investing in, suppose just taking an example, in HDFC Nifty 50 index fund. Now, I can buy that from the company's website itself versus going to a third party app. So can you tell me, what is the advantages or pros and cons of, let's say, buying from the website or buying from Kuvera or buying from any third party other website? I'm buying a direct plan. I'm investing the same amount of money. I'm assuming the returns would be the same because I'm not paying any cost anywhere. So why buy from X or why buy from Y?
It's a question of convenience more than anything else. I think can you go and buy from an AMC? Yes, you can go and buy from an AMC, and I have to say that over time, most AMCs have built a fairly robust online investing platform. Some of them have also launched apps, so on and so forth. But they are there. You can only buy a fund from that AMC. Okay. Now, the problem that happens is more a question of, now, where do you see your total portfolio? Where do you see, unless you are only buying funds from a single AMC and you have convinced yourself, I will only buy funds from that AMC, just use their app. And it's totally fine, by the way. But if you're not doing that, then you have to maintain like 5 different logins. You have to then have a separate infrastructure, maybe an Excel spreadsheet or whatever it is, where you kind of copy paste all of those values. Some AMCs do allow you to import external mutual funds. Some don't. It's a very difficult process to kind of build up your system on how you are going to track it, but it can be done, right? Like if someone really genuinely does not want to use one of the investing platforms, I don't think it's impossible. It's just probably for the 0.01% of the really informed and the really tech savvy users that can use that. The other benefit is, we do provide a lot more analysis on the funds. We do provide a lot more analysis on your portfolio. For example, how is it doing versus your peers? What is your XIRR? What is your, we allow for goal planning. So our focus is more on personal finance, right? Rather than just AUM capture, which is what an asset management company's core business is, right? So we provide a lot more tools. We provide a lot more, I think, benefits to the end user at the same place in a more kind of, I would say, in a better designed UI UX, because I mean this is our tech is where we want to excel, right? I mean, if you look at the UX, if you look at the journeys, if you look at how what the vibe of an app is, it'll be very different from at a platform, and it'll be very different at an asset management company. So those are the pros and cons, and I think even people who start with having multiple logins at multiple AMCs quickly realize that that model doesn't scale. And having a centralized platform, and then there are a bunch of platforms to choose from, and then you can choose the platform that has the right level of service, has the right level of tools that you want, provides a easier solution to kind of manage everything under one umbrella. I'll give you a simple example here. I mean, we allow for family accounts, right? So you can look at your portfolio, your wife's portfolio, your parents' portfolio, everyone in just one view. Whereas kind of, logging out and logging in every time and then kind of writing that number in an Excel spreadsheet. So small things over time just creates that difference of what it means to go through a platform versus what it means to kind of go directly to the AMC.
So I am that someone, the idiot who has, invested on multiple AMCs with my account, parents' account and all of that. And it is it's definitely a pain. There is no doubt about it. And I make that Excel sheet and revise it every few months. And let me tell you, these platforms, especially, and I want to name ICICI Mutual Fund has a very horrible platform for anyone who is listening. Please don't use it. This has got nothing to do with Gaurav or Kuvera. I've been really, really irritated with the ICICI Mutual Fund's tech platform. They have made and multiple things that they have done. They have made my portfolio zero. They have not allowed me to make a transaction. They have, in a fund which has a profit, they have shown that there is loss. They have reported wrong numbers for XIRR, because I actually sat down and calculated and the wrong number was displayed on the platform. So I've been through a lot of that. And yes, it is a problem. And I have tried multiple solutions for third-party apps via this as well. The problem that I have faced, and it's extremely, rarest of the rarest circumstances, that sometimes when something goes wrong on the third-party apps, like Kuvera or X or Y or Z, I don't want to name any apps in particular, but when something goes wrong, I do feel that there is no one who's taking the responsibility of that. If something goes wrong on the HDFC Mutual Fund's website, I can call their customer care and say, boss, whatever wrong happened, it happened at your website. On the other hand, when something goes wrong, I sometimes feel that there is a tendency in the apps to justify that, no, this didn't happen because of me, this happened because of the payment gateway or X or Y or Z. So they play, they pass the blame, and which hurts me as an end user. If a problem happens with the HDFC AMC website, I at least have someone to call. Here, I keep just shuffling around. So do you have any processes in place for, these small little errors and bugs and fixes which come into the picture? Because I'm telling you, ICICI does not. They take a long time to fix the issues.
We do, and everyone else does. The advantage of any online platform, any one-to-many online platform, is that any error that you see will be solved for everyone and for all of future in one go, right? Unlike offline processes where it has to be rectified every single time, in an online process that actually has a learning loop. As long as you have a strong learning loop, the problem will be solved. Problem will be solved for everyone and going in the future. Having said that, I don't want to. My takeaway from this is that we need to delight Ravi a lot more for him to come to one of the platforms, and we'll work on it, man. I hear you totally.
Sure. Moving on. So you started Kuvera sometime in 2015, and then it was acquired by Cred a little while ago. I'm assuming that there was a cash component and an ESOP component and everything. Did you also get some extra cred coins on your wallet?
No, that
Just
didn't happen.
just a traditional deal. So can you tell us a little bit about how did that actually happen? Maybe some investors connected, or how did that process go?
No, I think Kunal, I have been speaking for some time now, and I think there was a quick realization that we could build a much stronger, a much larger wealth franchise together than what we could do alone as Kuvera. And I think the acquisition was a kind of the end product of that rather than anything else.
Okay. And has there been a change in the way Kuvera operates post the acquisition, or it's broadly the same?
It's broadly the same, yeah. And I think, but changes will happen. But you have to wait and watch. It'll happen fairly soon, and hopefully we are able to delight you even more. But just give us some time on that.
I hope you are enjoying this conversation, and that's why I request you to please like this video so that this conversation reaches a larger number of people. Let's say you're giving a lecture at a college, people who are just graduating, and you're telling them about investing. What would you suggest to them? To take the active route versus the passive route? To take the regular route, that means go via an MFD, or just buy the Nifty 50 index fund? What would be your suggestions for them? A, in choosing the doing it yourself versus going through an MFD, and B, picking up an active fund or picking up a passive Nifty 50 index fund, for example.
This is by the way an amazing question, and this is also a question that no one listens to your answer. Huh? But I'll still answer it. They're still going to go and punt FNOs and all of that stuff. I think that. That's why you're also probably smiling. So first I'll give you a factual answer, but then I'll also talk about a meta question that I am really.
This is where I like to interrupt, man. I have been a teacher for so long, so I've seen the students make mistakes over and over and over again. But as a teacher, I believe it is my job to tell them that 2 + 2 remains 4. So
Fair enough.
It might be an exercise in futility, but I do believe that the audience deserves that 3 minutes of time of yours to maybe.
I'll also give them a much important, and I think a more important meta question to ponder. According to me, that is the more important question. Between active and passive, I would say passive, because I think the data in India is very clear that most active funds are not outperforming their benchmark. If the data changes, I'm very happy to change my mind, but already 70 to 85% of active funds underperform in a 10-year duration. So why pay the extra expense ratio? Direct versus regular, I think direct is a better option. You get to keep more of your money with yourself. Yes, there is a small group of people who might say that I cannot invest without help. And then maybe an MFD or an advisor or an RIA is the right channel for you to get the right advice before you start investing. But otherwise, I think for the large population, direct would be my pick. Now, coming to the more interesting meta questions, this is specifically true only for the 20 to 30 cohort. Say you are investing 20% of your income, which is kind of fairly true for this cohort. Probably the number is even lower. And you make 100% return, which is basically, you're making 100 rupees, you're investing 20 rupees. 1 year you have 100% return, which is an outstanding year. 1 in 20 years or 1 in 50 years, you will have that 100% kind of a return. You make 20 rupees. Okay. And you spend a huge amount of time and effort in identifying stocks, mutual funds, trends, ETFs, small cases, this, that, everything under the sun to get that 20%. And 1 year you get that 100% return and you realize, hey, dude, it's not replicable. I have to put in the same time and effort. You're not compounding, right? In trading or in markets, right? Compounding comes much, much later, right? You have to now put in the time and effort again to get some returns from the markets. It could be negative the next year. Now, the question to a lot of youngsters is this. If instead of spending all of that time and effort, if you had really become really great at your job, if you had invested that time into your human capital, you would have gotten a 20% raise next year anyways. 100% return. 20 rupees का 20 rupees हुआ, यहाँ पे आपका salary 100 का 120 हो गया. But this 120 is permanent. This is compounding. Your human capital has literally stepped up to another plateau. You have differentiated yourself from so many youngsters who are still kind of chasing the easy money. So I think the meta question is this: why don't more Indian youngsters take that path to kind of go for excellence, to go for this long-term compounding of human capital, which is going to make you far more richer? I mean, if you say that, you know what, if someone comes to me and says, you know what, Gaurav, I hear you, but I'm going to go and invest in regular plans, in active regular plans through a distributor, and I don't want to think about it. I don't want to spend a minute on it. I'm going to spend all of my efforts in becoming the best at my chosen field. I would say, well done, dude. I'm not going to then convince him, because that is the bigger question that is 80%. That is the Pareto question to solve for. Income is what leads to excess savings. Excess savings is then invested. The first job is to kind of double your income, triple your income, quadruple your income. Have that much excess savings that a lot of these secondary and tertiary decisions, 1% ज़्यादा मिल रहा है, 2% कम मिल रहा है, you don't care. But I don't think people see it like that. I don't think people ask, or even a lot of the youngsters, when I tell them this, they will be like, yeah, no, man, everyone's making 2x in stock markets. I also need to make 2x.
Fair. And, to be really honest, if I got an opportunity when I was 25 to talk to someone who runs a company like Kuvera, I will also be asking him कि सर पैसा लगाना कहाँ है, कोई बताओ बढ़िया स्टॉक वगैरह आपकी नजर में है. तो that's the question that even I would have. So I don't blame the kids, but I'm sure they'll make
I don't blame them. This is just another point for them to ponder, that can they, in the long run, are they even asking the right questions about which is the right stock, which is the right FNO, and so on and so forth, versus, hey, how do I become the top quartile in my chosen field?
Fair. And to be really honest, man, most 25-year-olds that I meet, I find them way smarter than at least what I was at 25 when it comes to personal finance.
True.
मतलब मैं तो जब कॉलेज से निकला था, मुझे तो TDS क्या होता है ये भी नहीं पता था. मतलब जो पहला पेचेक हाथ में आया था, यार ये पैसे कहाँ कट गए. मतलब तनख्वाह तो मेरी जो है वो 30,000 आनी चाहिए थी. 30,000 लिखा हुआ है, 3.6 LP है उसके ऊपर, जो कॉलेज से वो ऑफर लेटर के अंदर था. तो वो कहाँ गया, वही समझने में जो है मेरे को 2 महीने लग गए थे. एंड द किड्स दीज डेज, इफ आई कैन कॉल देम, इज दे आर अ लॉट smarter and lot more aware as far as the financial products are concerned. Yes, there are issues, but I'm sure they'll learn from their own mistakes. Now, coming to you. So how do you manage your money currently? Do you invest in stocks directly? You have some mutual funds. Broadly, what does your portfolio look like?
Yeah, I don't invest in stocks. I don't think I have the bandwidth, to be honest.
Are you legally allowed to invest in stocks? Because, there are some restrictions on people who work in the finance industry that, they can't. I think mutual fund managers aren't allowed to. There are some restrictions. No restrictions, you are allowed?
We are allowed. I think for mutual funds, the issue is slightly different, because you might be researching a stock and the regulator doesn't want you to be invested in it in a personal capacity, kind of what comes around, and then it's called front running, right? We don't do any such things. We're not selecting securities. We are not telling people which stocks to buy and which not to buy. So yes, we can invest in stocks. I don't invest on it for a very different. I don't think I have the bandwidth to research stocks. I don't think I can compete with people who are spending 10, 12 hours a day researching stocks. I don't think I have the resources available to me to talk to the companies, to talk to their managers, to talk to their competitors, to talk to their suppliers, to talk to their distributors, to actually be able to do the right level of truth seeking required to then able to say, yeah, this is a high conviction stock for me. So I have my own style. I prefer asset allocation. I prefer passive funds. My entire portfolio is passive funds and gold. I use beta as leverage, that I told you. It's a very low-touch way of managing one's portfolio. I'm mostly happy with whatever levered returns I can get. In India, you get it through small cap funds. In India, you get it through small cap funds. You also get it through momentum. You also get it through value. And so far, all of them are working really, really good. And that's the way I manage my portfolio. And that's the way I would continue to manage it.
Okay. And when you talk about gold, I'm assuming this would be some sort of digital stuff like sovereign gold bonds or gold ETFs, or there are actually bricks in your house that I can come and loot.
No, there are no. So ideally, they should be SGBs, but I don't have a Demat account. I just don't want to even open that Pandora's box.
You don't even have a Demat account?
Demat account ही नहीं है मेरे पास इसीलिए.
बहुत बढ़िया है. See, I think मतलब मेरे को इतनी एडिटिंग आती नहीं, अगर आती होती ना तो इसकी रील काट के मैं डाल देता कि सीईओ है कुवेरा का आदमी और उसका डीमैट अकाउंट ही नहीं है, मतलब. और आजकल के जो लोग हैं उनको लगता है कि नहीं भैया हम टॉप हैं. Anyway, so no SGBs.
I can't do SGBs and ETFs. So I just have gold mutual funds there. There are a lot of very low cost gold mutual funds.
Fair.
I use them. They are more expensive than SGBs. I understand that, right? But gold is always a counterweight in my portfolios. It's never the star player. So I'm willing to kind of take a little bit of that hit because I hold gold very tactically. I'm not holding it for 8 years. And SGBs, अगर आप secondary market देखोगे, if you know what I'm talking about, the bid offer is huge, right? So in my worldview, in the way I'm doing things, mutual fund works for me, and it keeps me away from Demat accounts here. So I and stock investing myself. Plus, mutual funds in India, I don't know why people and this is just a bit of a digression, but I sometimes find it very hard why people, no one talks about how much wealth has been created through mutual funds in India, right? I mean, we look at. So on Kuvera, what we do is something called peer analysis, right? Where say I'm in the 45 to 50 age bucket, so my portfolio is going to be compared to everyone who's in the same bucket on Kuvera, right? So we have their entire mutual fund history. These are true portfolio returns. These are not cherry picked. The user cannot choose which part of their cash is imported and which part is not imported, right? It is all or nothing. Okay. For my cohort, the average XIRR is 20%, close to that, 19.5% or something like that. Right? I have been investing in mutual funds in India since 2016. My portfolio XIRR is close to like 29% right now. Right? In every peer group that I see, the average XIRR, the XIRR at the 10th percentile is significantly above FD returns. I think people don't value this as much as they should. It's a very low investment way. It's a investment in terms of time and effort to get an FD++ return. Yes, it is not linear. Yes, there will be drawdowns. Yes, there will be drawdowns that will be absolutely painful, and a lot of education is needed for people to stick through those drawdowns. But they will happen in single stocks also. They will happen in any risky asset class, right? And this is something that kind of, every time we publish this data, this is the average return by peer groups. Everyone is like, oh no, it cannot be that high. But I think it is that high. It is that robust. And sometimes it gets kind of also, someone will come and say, oh, but are they beating the index? And it becomes a very interesting question. And I'm like, okay, so when you're talking about active funds, you're not very interested about beating the index. But then when you're looking at mutual funds as a whole, you're very interested about whether that individual's portfolio is beating the index. Most likely it's not beating the index. Okay, I mean, we did a replication study about 4 or 5 years ago where we basically said that, okay, say there's an investor called Ravi. I'm going to take all your mutual fund investments since you started investing and replicate it by just an index fund. Where you bought a fund, you will buy an index fund. Where you sold a fund, you will sell an index fund, right? The index replication portfolio will probably do better for anywhere from like 80-85% of the investors. Going back to the point that even the time and effort that you're spending to identify the right fund, do you really need to spend that time and effort? Like a lot of this can be simplified so much. But the fun part is this, even when some of this data is released, it makes no difference on people's habits. The habits are so deep-rooted. That desire that I want to 5x my portfolio in 2 years is so strong. And this whole idea that 90% of the people were not able to do it, but मैं कर लूंगा. Very, very deep rooted, right? So, and very hard to fight against. But anyways, I mean, it's a bit of a digression. But I thought
I agree.
it's something that people should know.
I fully agree with you. I think when I started investing, which was when I started making money in 2007-ish, I started with, buying individual stocks, and thankfully 2008 में ही समझ में 2007 में तो मैं अपने आप को अच्छा समझता था कि जहाँ पैसा डाल रहे हो वहाँ डबल हो रहा है. 2008 तक आते आते समझ में आ गया कि नहीं भैया कुछ होने वाला नहीं है. And since then, bulk of my portfolio has been in mutual funds. I believe somewhere, definitely more than 90% of the assets are in mutual funds and bonds and stuff like that. No individual stocks for me. But I'll tell you where I miss out and why do I feel like, yes, there is money that is made, the XIRR, all those arguments are valid. If I'm investing in HDFC top 100 mutual fund, good fund, bad fund, we can talk about it. I don't have any story to share at a party. कि भाई क्या किया, अरे मैंने वो HDFC या top 100 म्यूचुअल फंड में डाल दिया, कहानी खत्म. बट अगर मैंने बजाज फाइनेंस में पैसा डाला है,
ग्लैमर नहीं है, मतलब कहानी में ग्लैमर नहीं है,
तो मेरे पास में कोई कहानी है सुनाने को. देख, तुमको पता है मैं कितना बड़ा स्टार्ट हूँ. 40 रुपया का था तब मैंने खरीदा, फिर 120 पे बेच दिया, और मेरे बेचते ही देख वो जो है वापस 80 पे आ गया है. और मैं तेरे को बोल रहा हूँ एक बार 90 का लेवल क्रॉस करेगा तब उठा लेना. Unless I have a story to tell, it doesn't work. And you can't have that many stories about real estate, because that's the other stories which go on at parties, and real estate as an investment is a whole different discussion altogether. But real estate में आप कितनी खरीदोगे कितनी बेचोगे यार, बात वहां खत्म हो जाती है ना. स्टॉक का तो ये है कि हर बार आपके पास में कुछ ना
हाई है रियल एस्टेट का.
हाँ,
टिकट प्राइस इतना हाई है रियल एस्टेट का, आदमी जमा कर करके एक खरीदता है.
यही खरीदता है, तो कहानी नहीं आएगी ना, स्टॉक में तो आएगी. अब अपनी सिचुएशन, बच्चा है, बच्चे की बर्थडे पार्टी के ऊपर गए, सारे बच्चे लोग खेल रहे हैं, अब 3 पापा लोग साइड में है जिनसे मैं पहली बार मिल रहा हूँ. वेदर की बात करोगे, पॉलिटिक्स की बात करोगे और स्टॉक की बात करोगे, इसके अलावा कोई टॉपिक जो है वो बचता नहीं है. एंड दैट इज वेयर आई बिलीव अ लॉट ऑफ पीपल गेट इनटू दिस stock buying game.
So are you, this is a very interesting point actually. So are you saying that if we had better and more interesting hobbies, we would invest less in stocks?
We would have something less in stocks. We would have something to talk about. अरे बॉस, अगर मेरी हॉबी है भी, say for example I am really interested in quizzing, मैं क्विजेज में पार्टिसिपेट करता रहता हूँ. मैं जयपुर में रहता हूँ, मैं जयपुर से बॉम्बे जाता हूँ क्विज में पार्टिसिपेट करने के लिए, क्योंकि मेरे को उसमें मजा आता है. अब जिसको क्विजिंग में थोड़ा बहुत भी इंटरेस्ट है, जिसको पता है, उसके साथ में तो आई कैन हैव दिस कॉन्वर्सेशन, बट टू अ रैंडम पर्सन आई कैन नॉट. एंड स्टॉक मार्केट और पॉलिटिक्स एंड स्टफ लाइक दैट बिकम्स अ कॉमन डिनोमिनेटर कि अच्छा इसके बारे में सबको थोड़ा बहुत तो पता ही होगा. आईटीसी का भाव क्या है ये नहीं पता हो, बट कम से कम हाँ आईटीसी है, बड़ी कंपनी है, उसका शेयर जो है वो चढ़ रहा है या नहीं चढ़ रहा है, चढ़ रहा है नहीं चढ़ रहा है की बात नहीं. बट आईटीसी का मैं किसी को बोल दो ना कि मैं बता रहा हूँ 200 रुपए का शेयर है या 400 रुपए का शेयर है, मेरे को पता है, किसी अननोन आदमी को मैं बोल दूंगा ना 1500 का था, मैं 2000 में खरीद लिया, देयर इज स्टिल अ स्टोरी देयर. म्यूचुअल फंड के साथ में क्या स्टोरी मैं सुनाऊंगा कि हाँ यार मैंने वो निफ्टी का इंडेक्स फंड लिया था, फिर क्या, कुछ नहीं लिया, रखा है, पड़ा हुआ है, एंड ऑफ स्टोरी हो जाता है. तो
there are very interesting ramifications also what you're saying, because if it's a social phenomena which is kind of also multiplying this need to invest in stocks. So if you go back to your example, right? You go to your kid's birthday party and you meet 3 dads for the first time. You're only going to talk about your winners there.
Yeah.
आप उनको बहुत ही एक वन साइडेड स्टोरी सुनाओगे. आप वो स्टॉक के बारे में बात करोगे जो 20 में खरीदा और 200 चला गया, उसके बारे में नहीं करोगे जो 700 का खरीदा और अब 50 में.
बिल्कुल.
So the perception it will create is everyone I know is making money.
The world is driven by envy, not greed. मैं नहीं मानता हूँ उसको जो लोग बोलते हैं ना कि यार वो 20 का जो है 40 करने के लिए आते हैं, 20 का 60 करने के लिए आते हैं. I at least don't believe that a lot of people get into the stock market कि उनको 20 का 60 करना है. उनको इसलिए करना है कि अरे अमित भैया ने पता है लगाया था 20 और 60 में बेचा, अगर अमित भैया कर सकते हैं तो हम भी कर सकता हूँ, लेट मी गिव दिस शॉट. सो दिस envy, jealousy.
Charlie Munger would 100% agree with you because that's his worldview as well. His worldview is that envy drives the world.
Envy drives the world. I think मैंने वही पढ़ा होगा, कहीं ना कहीं से पढ़ा हुआ है, so I probably read it from there only. So Gaurav, you are assumingly you would be much beyond your whatever FI number is going to be. I have been following you on Twitter. I know कि इतने कोई तुम्हारे अनाप शनाप वाले खर्चे नहीं है, at least photos तो नहीं आती है. So you worked abroad for a long period of time. You started a company. That company was acquired by Cred, which is quite a big unicorn in itself. I'm not going to ask you how much money you have, but let's assume that you have more than enough money required to retire. Why are you still working then? Why not pull the plug?
I think, money is only a part of the equation for me. I envy people who have that clarity of mindset and who have this idea that, I'm going to kind of retire, not in the sense that I'm kuch nahi karunga life mein, but I'm just going to now pursue my passion projects. Like you're pursuing a passion project, right? It takes whatever time and effort it takes, right? I think people are built differently. I think I genuinely and very strongly believe that there has to be a user first platform. There has to be a platform that's not just promoting punting all the time. And I mean, this is when we started Kuvera, we were very clear on what we wanted to build, right? And that story is not done yet, right? That's one part of it. The second part of it is like, I think as an individual, I don't know if I can retire. Maybe I'll call myself retired, but then I'll still be kind of, doing things 7, 8, 9 hours a day. I like being involved in things that I'm very curious about. I like being involved in things where I don't know enough, but where I am really kind of interested in figuring out the why, the 5 why, getting deeper and deeper into problems. And I think some of it is just personality types. You can say it's a good thing or a bad thing, but जो है सो है.
नहीं, it's a great thing. बॉस की पर्पस तो है. मेरे को तो सबसे बड़ा प्रॉब्लम यही हो जाता है कि क्या कर रहा हूँ, क्यों कर रहा हूँ, कोई पर्पस नहीं बचा है. सो माई पर्पस फॉर दीज पैशन प्रोजेक्ट्स एंड ऑल ऑफ दैट इज कि अच्छा चलो इस बहाने कम से कम मेरा फर्स्ट हाफ सॉर्ट आउट हो गया. ये अच्छा ट्यूसडे को फर्स्ट हाफ में मैंने इसके साथ कर रखा है, ये पूरा दिन मेरा इसमें जाएगा. अब कल मेरा पूरा इसको बैठ के एडिट करने में जाएगा. सो आई हैव दैट 1.5 day sorted in doing things that I actually like. I genuinely like talking to people, hearing about views, learning something new. और editing तो अभी मैंने थोड़ा बहुत सीखना चालू किया है. So I'm not good at it, but I do believe that is a skill that I'll be able to pick up. So ठीक है Gaurav, I think we'll try to wrap this up now. But before we wrap up, a final question for you. What are your 3 tips for mutual fund investors?
See, the first tip is keep it simple. Okay, I mean, I think I've said it earlier. I'll just kind of repeat it. Direct plans, systematic investing, passive funds. Keep it as simple as possible. Choice does not necessarily lead to better outcomes in a probabilistic world. And investing is as probabilistic as it can get. This is not science, this is not maths. You can't solve the markets, right? So don't try that. Second tip is again something that I've already spoken about. I'll say that is focus on your day job. And I'm telling you the path to riches. Unless you're from a rich family and you're inheriting a lot of money, then investing is the core skill for you. The second and third generation investing is the core skill because it's about preservation and growing wealth that you already have. But otherwise, you have to build the corpus, and building the corpus will happen if you want a reliable way of getting wealthy. Then focus on compounding and focus on compounding your human capital. Third thing, I mean, there's no real third tip. I think the first two kind of covers most of it.
Fair.
Just enjoy life, man. I think some people.
Third tip, use Kuvera for your investment.
But more important, people get too involved in this investing stuff. Yeah, right. I've seen people who are like creating spreadsheets, building this, that, and the other. Right, like they'll make DCF models, and I sometimes think यार थोड़ा lightly ले लो. मतलब हाँ important है. Money is important for life. I mean, someone who's lived in a very middle class place. I know that. I'll never deny it. Anyone who says money can't buy happiness comes from a very rich family. बाकी सबको पता होता है money is very important, but people are going overboard. Yeah, I think we are seeing a very barbelled society coming up right now. People are taking loans. There is a group of people who will take tons and tons of loans just to kind of consume, and there are people who will not consume at all because they just want to maximize their savings. Middle path तो चला ही गया लाइफ से, या एकदम hedonistic है या एकदम investment focused है.
मिडिल पाथ वाले बात नहीं करते.
Maybe true.
बात
मिडिल
वो
पाथ वाले
है
बात नहीं करते. That's true.
मतलब
सोशल मीडिया में सुनाई नहीं देते हैं. Probably
सुनाई नहीं देते ना. मतलब it's not very interesting conversation to have कि अच्छा हाँ ठीक है जो पढ़ा है वो पढ़ा है. कितने लोगों से मैं तो बात करता हूँ ना, किसी से बात कर रहा हूँ, बहुत लोगों को पता नहीं होता है कि उनके पीएफ में कितना पैसा पड़ा है. एंड पीपल बाय द टाइम दे आर इन देयर मिड 40s, पीएफ में अच्छा खासा पैसा इकट्ठा हो गया होता है. हवा ही नहीं है, दे हैव नेवर इवन लॉग्ड इन एंड चेक्ड. बट हाँ ये पता है कि पिछले साल किसी स्टॉक के अंदर मैंने 1 लाख लगाया था जिसका कि 170 हो गया है. भाई तेरी तनख्वाह जो है ना वो 6 लाख रुपया महीने का तुम कमाता है और तुमने 1 लाख का 170 कर लिया, तो वो कोई स्टोरी नहीं है सुनाने लायक. बट इट इज व्हाट इट इज. So thank you, Gaurav. Thanks a lot for coming to the show, and thank you audience for sticking with us till the end. I would request all of you to like this video, to subscribe to our channel, and we'll keep bringing more such guests to you. Hope I have earned the privilege of your time. Thank you.